Have you ever wondered why some people can make money without owning a shop, selling a product, or working a traditional job? It almost sounds impossible. You open your phone, study a chart, place a trade, and a few hours later, you've either made money or lost money. But here is the real question: where does that money come from? To answer that question, let me tell you a story. Imagine two friends, Kevin and Brian. Kevin is traveling to the United States next week, so he needs US dollars. Brian isn't traveling, but he has savings US dollars from a previous trip. Kevin says, "Bro, I need dollars." Brian replies, "I have some. I will sell them to you." At that moment, a trade takes place. Kevin gives Brian Kenyan shillings, and Brian gives Kevin US dollars. Neither of them realizes it, but they've just participated in the same market that banks, governments, multinational companies, and hedge funds and professional traders use every day. That market is called the foreign exchange market, or simply Forex. Now imagine Brian doesn't sell his dollars immediately. Instead, he waits because he believes the dollar will become more valuable. A week later, the exchange rate has changed. The same amount of US dollars can now be exchanged for more Kenyan shillings than before. Brand sells his dollars. Without working extra hours, without opening a business, he earns a profit simply because the price has changed. This is the foundation of trading. As traders, we don't make prices move. We study the market, make educated decisions about where prices may go, and manage our risk. Sometimes you are right and sometimes you are wrong. Throughout this course, you will learn how to understand those price movements instead of guessing. By the end, you will know how traders read charts, why market moves, and how to protect your money, and how to build a strategy with discipline and patience. So, welcome to the course. If you don't know me, my name is Blaze, and I've been trading for over an year now, and I'm here to share my journey with you. Okay, so as we have just said, Forex is the exchange of one currency for another. Now, we are going to answer one important question. What exactly are we buying and selling? Let me tell you a story. Imagine you're in a village market. One farmer grows maize, another farmer grows beans. The maize farmer needs a beans for his family, and the bean farmer needs maize. Instead of using his money, they decide to exchange what they have. One bag of maize is traded for one bag of beans. Now ask yourself, could they exchange just one bag? Of course not. Maybe today one bag of maize is worth two bags of beans because maize is scarce. Or maybe after a good harvest, one bag of maize is only worth half a bag of beans. The value changes depending on demand and supply. Currencies work exactly the same way. The only difference is that instead of maize and beans, we are exchanging currencies. For example, Euro USD. This simply means we are comparing the value of the euro with the US dollars. The first currency is called the base currency. The second currency is called the quote currency. Think of it this way. Imagine you walk into a supermarket, you see a bottle of water costing 100 Kenyan shillings. The bottle is the product and the price is what you pay. In Forex, the euro is the product, the US dollar is the price you are paying. If euro USD is trading at 1.20, it means 1 euro costs $1.20. Now imagine demand for euro increases. More people want to buy euros. Just like when everyone wants a popular new phone, the price goes up because there is a high demand of that phone. The euro becomes stronger, the chart moves upwards. If fewer people want euro, the price falls, the chart moves downwards. This is why charts are always moving, they are never static. Price changes because buyers and sellers are constantly competing. Now let's talk about another market you will hear me mention throughout this course: gold, the XAU USD. Gold isn't a currency, it is a precious metal, but it can be also traded. When you see XAUSD, it simply tells you the price of 1 ounce of gold in US dollars. If gold becomes more valuable, the price rises. If gold becomes less valuable, the price falls. The principle is exactly the same. Whether you are trading currencies, gold, oil, or stock indices, you are always trying to answer one question: will the price go up or will it go down? In the next lesson, we learn how traders measure those price movements using pips, points, and lot sizes. Once you understand those concepts, you will finally know how traders calculate profits and losses. I will see you in the next lesson.